welcome to this edition of the Entrepreneurship Through Acquisition podcast, brought to you by the University of Chicago Booth School of Business, Polsky Center for Entrepreneurship. I'm Brian O'Connor, Adjunct Professor of Entrepreneurship at Chicago Booth, and joining me today is Coley Andrews, co-founder and managing partner of Pacific Lake Partners. Thanks for joining, Coley.
Thanks, Brian. Great to be here.
Yeah, thank you. Coley, maybe where we could start is just a little bit of your background and how you sort of came to learn of the search fund model. You've now become sort of an institution in the search fund world, and I'd love to hear about how you sort of found yourself in it.
Yeah, sure. So it goes back to before I applied to business school, I knew that I wanted to do my own thing, but I did not know what that was. So I wrote my business school essays and started my own business. I was fortunate to get into Stanford GSB, and within basically the first month, I learned about the search fund model, and the light bulb clicked, it went off. And I said, man, this is great, this is what I want to do. Spent my summer working in a company owned by two search fund entrepreneurs to really pressure test, is this the life that I think I want to lead? And the answer was yes. So fast forward to my second year, I was ready to go do my search fund, and my first investor called me and said, have you really started raising the rest of your search fund yet? I said, no, what's on your mind? I said, well, I've got another idea. And that idea is what is now Pacific Lake. So I partnered up with Jim Southern, who was the first search fund entrepreneur, and he has successfully done 3 searches as the entrepreneur, in addition to investing in multiple entrepreneurs that came after him. And we partnered up to launch Pacific Lake Partners with a sole focus on backing search fund entrepreneurs. And that was in the summer of 2009. I remember one of my professors said to me, once you decide to take the entrepreneurial leap, mountains will move that you could never see before. And that's exactly what happened to me. And it's been a great partnership. And here we are today, having invested in over 100 search funds, and we've got 6 people kind of full-time dedicated to working with search fund entrepreneurs.
Wow, that's great. So initially in 2009, the thesis has always been provide capital, support, mentorship, guidance for those that might be out pursuing the search fund path and ultimately acquiring great small businesses. Has that shifted at all over the last 7 years of your existence?
Yeah, no, it hasn't, which has been probably the most exciting piece here. One of the big questions we had back in 2009 was, well, how much could you really do in the sandbox under the heading of entrepreneurship through acquisition through the search fund model? And thanks to the rapid rise in growth and interest of the model, throughout the country and around the world, we've been able to grow Pacific Lake and not leave the search fund sandbox, which is what we intend to do and where we intend to stay forever.
That's great. So let's talk a little bit about your the early stages of your working with search fund entrepreneurs. When do you like to start establishing the relationship? What's sort of the appropriate method of communication for that? How does that look? Yeah,
so the answer is all of the above, but we definitely fall in the category of happy to engage earlier rather than later, including when someone's still in the formative stage of figuring out if this is what they want to do or not. All questions are good questions, and from our perspective, it's the beginning of a potential relationship that can go for a long time. So multiple touch points is a good thing, and that's important to us. Of course, some folks show up and say, hey, I'm doing a search fund and here's my PPM, can you talk? And of course we talk to them at that time as well. But we've sort of been a bit of a pioneer, I think, of traveling around to business schools and reaching out to folks to just raise awareness of the search fund model. And as a result of that, we've enjoyed a lot of conversations with first and second year students through the years who are trying to figure out if this is the right fit for them. And if it's the right fit for them, then hopefully it's the right fit for us too. You
now have over 100 searchers that you've backed. Many of those have resulted in follow-on acquisitions that you've partnered with.
Yep.
So the data set is statistically significant, and it's large enough to start to draw some conclusions around some of the folks that you've partnered with, some of the acquisitions that you've effectuated. If you could say, and let's touch on both of those, but let's start with the searchers that you've decided to partner with. Are there any common traits or themes that you see among that group that you think, this is really somebody that we might be compelled to partner with, the fit might be there?
Yep.
Or, on the flip side of that, are there any things where you might just kind of say, hey, maybe this isn't the right fit, this might not be the right person to partner with us in our strategy?
The big differentiator, I would say, though, amongst the 100 or so searches that we've been involved with really comes down to bias to action. Do you get out of your office and go get in front of people as you try to buy your company? Those are the folks that are materially increasing their odds of buying a company, and depending on how they run their search, buying a good company. versus the ones that are just not as comfortable with that. And they spend more time in their office, and frankly, they just look like the rest of the people out there smiling and dialing them to owners, and that's not a good place to be.
How about the willingness and seeking out of guidance and mentorship and an active dialogue with you and your colleagues at Pacific Lake? How do you think about that specifically?
Yeah, definitely. So we exist to be supportive, but you call us. I don't call you. And that's by design. Like, this is your rodeo. This is your choice as an entrepreneur. We want to back people that have the courage of their own convictions, who believe they can do this, and want to surround themselves with people that can help them do it. You know, there's the saying out there, if you want to go fast, go alone. But if you want to go far, go together. We're believers in that. So what that means is people, once they start their search, will call us as questions pop up. We find that usually it's a good idea to spend some time in the first 6 weeks talking through how you're thinking about launching your search. We can help potentially correct a trajectory that you might be headed down. But then after that, it's really, hey, how do I do this? Or, hey, I'm thinking about talking to this person, or I'm thinking about submitting an LOI. How does that work? Am I out of left field here or not on price, value, et cetera? And some folks have said, hey, should we set up a bi-monthly call or something like that, or every few weeks? Our experience has been, you'll have plenty of questions that are going to come up, and our job is to call you back.
Shifting gears a little bit, you've obviously made, again, a large number of investments through the Pacific Lake. What have you seen, and what guidance might you give some of our viewers and listeners as they think about constructing their investment thesis, whether it be industry focused or otherwise, on what you've found to just make a great acquisition for this model?
Yeah. So the great news is there's a lot of ways to be successful under the heading of entrepreneurship through acquisition. If you buy a certain type of company under a certain set of circumstances and you don't pay for it much, you can be successful with that. If you have the mindset, hey, I want to build a business over the long run, that's going to inform a different set of circumstances under which you would want to go out and buy a company. Our flavor that we are most excited about is backing someone who wants to be a CEO. And they really want to use this as a vehicle through which to build a company over the long run. And that is where you're going to come up with a group of folks that say, I want to buy a good business, but I need to be in a great industry. Because if I get into a great industry, the odds are very high, we believe, that entrepreneur with some support at the board level can figure out the company. And the industry opportunity will provide them with a long runway to build a meaningful multi-$100 million business over the next 5 to 10 years.
Whether it's related to the way that they're managing their time, or their propensity to go out and get in front of business owners, or the targets that they're focused on, what are some of the mistakes that you see early on in the search that you might caution someone against making? Yeah,
so the big mistake is obviously spending too much time in your office, not getting out on the road. Even early in your search, we think that's really important. You've got to learn to practice your pitch. You've got to learn to explain the search fund model. It's viable. There's a lot of folks who have done it, and you should be proud of the fact that that's what you're doing. But you're going to have to get some questions asked from sellers to be able to learn how to answer those questions thoughtfully and clearly. So getting out on the road is really, really critical. A big mistake too is not spending time up front really thinking about process. And process falls into two camps. The process of identifying, analyzing, and accepting or rejecting new potential industries, because you will go through multiple industries over the life of your search. And then the process of then, once you like an industry, building a database or building a funnel of companies that you're reaching out to. And you want that to be something that can sustain on its own, so that when you, Brian, find your company and you begin really getting into diligence on it, your pipeline is still going in the background.
Yep.
So putting that investment up front to build those processes and systems can be a big game changer down the road.
I also heard you say there, Coley, that getting out and sort of working out the kinks a little bit on the fly too. I mean, is it fair to say that there is some learning and some development of those processes that you can't get by just sitting behind your desk and making sure that you've built the best possible machine? Maybe you've built a really good machine, but it's going to be refined over time. And those at-bats and those interactions with business owners, and the fact that you've chased down and went to the trade show for that particular industry that you might be evaluating, is there some value in the continuous sort of refinement and learning that goes on as you're getting out there and doing it while building the process?
Yeah, 100%. And look, this is entrepreneurship, and that is entrepreneurship. The constant testing, constant experimentation, constant refinement of how you're thinking about something to improve and make it better. And it applies during the search, it applies when you're buying the company, and it definitely applies when you're running the company. So when we feel that from someone that we might invest in up front, which is they're gonna hustle, they're gonna get out there, they're gonna blow through walls, but they're mentally open-minded to say, I'm gonna try different things and I wanna see what works, that's when we get excited.
Yep. So you've gotten excited about the searcher. There, the fit has played out. The acquisition and the target set that they're looking at checks sort of everyone's boxes, and everybody's excited about it, and the thesis is coming together. You make the acquisition. What does life then look like for that entrepreneur with Pacific Lake and specifically Coley as a partner into sort of the operation of that business?
Yeah, totally. So it's case by case and driven by the entrepreneur. So before you close and buy your company, you're going to put together a board, and you will be the person that's going to seek out the nominees for that board. The shareholders will support it, but the point is you want to get people on your board. And for those that reach out and say, hey, I've enjoyed the working relationship with either Pacific Lake or with you in particular, and I'd love for you to be on the board, that's exciting. It's hard to get people to go on boards right now in the search fund universe, and it's an area of short supply, and it's something that we as a firm are really trying to build out so that we can offer that to entrepreneurs, i.e. high quality directors with operating experience to help them run the company, learn how to manage it. But once you're in there, you're living every day in that company, not us. And you want to have, as an entrepreneur, an open line of communication on whatever topic you want to talk about, because everything's going to come up. And sometimes that means Sunday night at 10 o'clock talking. Sometimes it means, emergency this or that, fire drill this or that. And I think it's really important to have one or two people on your board who you feel comfortable having that type of relationship and communication with, and who can help you navigate those problems practically.
So some of our viewers and listeners might not necessarily have the experience in the boardroom. They haven't been a director, they haven't had to assemble and think about the different dynamics that should be represented in a boardroom. Can you help us think through, Coley, what makes an effective board specifically for a first-time, relatively inexperienced CEO that is going to make some mistakes? I mean, admittedly, I made them, you made them, we all continue to make them. What is it about the construct of that board that might be most beneficial for that relatively inexperienced CEO?
Yeah, great question. So I spent about a month last quarter interviewing CEOs who were 3 to 5 years into running their company and asking them, looking back on that first 18-month period when they were running their company for the first time, how was their board helpful to them? Who was the most impactful director, not on a names basis, but the things that they did that really helped create the environment, Brian, that you just asked about. And it really came down to availability and engagement and show me, don't tell me. One guy said to me, look, we all want to go faster, and sometimes, though, we need a little help figuring out how to go faster. So I think you take that and say, okay, what do you need there? You need to set expectations as a CEO and as the board about what is reasonably to be expected and what's not. Patience is really important. Throw judgment out the window, right? Everything's got to be, how can we collaboratively work to try to help you become the manager and the CEO that you want to be? And that falls on the shoulders of us directors, but it also falls on the shoulders as you as the entrepreneur. You should expect and demand that your directors are going to respond to you. You're going to push them to help you be better, and that's stimulating as a director, right? Like, I don't want to push you in a direction. I want you to pull me along, and when you pull me along, that's going to fire me up to find a way to help you be as successful as you can be.
What do you expect from the CEO in return to offer up that guidance and that involvement? What should be the expectation from that CEO to gain that level of trust and engagement with Coley and your colleagues?
Yeah, I think that's a good question. It's got to be a desire for that, right? A desire and a willingness that I'm going to want to seek that out, that feedback out. That doesn't mean I'm always going to take it. That's a really clear distinction, right? Like, I don't want to work with someone who is just going to say yes, 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 right? I want to work with someone that's like, okay, so tell me more. How should I really think about that? And in the back of their head is like, I just want to win. So what do I got to do to figure out how to win? And I might think Coley's got a good idea, but Brian might have a better one. And you know what? I just got to make the best call here, and it's your call because you have the most information right there. So I think that's really important. And part of that is forming a team at a board level where people feel excited about you, feel excited about the company, feel excited about their ability to give you that time and engagement. And so creating that dynamic as the CEO, which goes back during your search and fundraising and putting your team together, is really important so that you set yourself up and your partners up for a win down the road.
Coley, last question. I want to be mindful of your time. We're coming to you here from the Entrepreneurship Through Acquisition Conference here, a collaborative effort between Booth and Kellogg, 400 or so attendees. Clearly this model is gaining momentum, understanding, capital. So all of the sort of the raw materials and the inputs into the system here, you know, from a capital standpoint, very qualified entrepreneur operators that want to pursue this path, the availability of targets in this lower micro middle market, it all sort of is coming together nicely, and we've seen a tremendous amount of momentum as it relates to search fund investing and broadly entrepreneurship through acquisition. What are some of the unique challenges that might be out there as a result of this increased awareness and excitement in the space that maybe didn't exist in 2010 or even in sort of the earlier part of the 2000s?
Yeah. One question we often get around this is, are there going to be enough companies for entrepreneurs to buy? Categorically, I believe that is yes. I'm not worried about that as a challenge. So what then are the really constraints? And the constraints are, I think, time and people. So look, this is hard. This is not an easy path. It is entrepreneurship. There is nothing guaranteed about it, period. So you as an entrepreneur got to understand that and be excited about that, but recognize that there are trade-offs to that. I think the rapid growth in the ecosystem is overall a really, really great thing. It may bring in people who don't really appreciate that, hey, this might not work out, right? And I think that's a really important thing to understand as an entrepreneur. It also over time will attract new investors into the ecosystem, and hopefully that will be a good thing too. That being said, it's really important, back to your earlier question, to understand you're working with somebody here that's very high potential, but they've never done this before. And there's a difference between just doing a deal, which a lot of folks have private equity experience doing a deal, but doing a deal with someone who's never run a company before and they're going to go live in that business 24/7 for the next 5 to 10 years of your life. And that requires looking at things with, I think, through a very different lens than what the rest of the world does. So, as the ecosystem continues to grow, hopefully the people that are attracted to be a part of it are going to spend time really trying to engage around what has made this so successful over the past so that we can persist it going forward.
Sure. Coley, very insightful.
Thanks,
Thank you so much for your time. Coley Andrews, co-founder and managing partner of Pacific Lake. We appreciate you taking the time, and thank you to our viewers and listeners. This has been an installment of the Entrepreneurship Through Acquisition podcast, brought to you by the Polsky Center at Chicago Booth.